Hello, everyone, and welcome to another episode at Meet the Property Guy. And today we'll be discussing about real estate versus other asset classes. So basically, what we are looking at is we are going to be comparing investing in real estate, owning real estate, versus owning or investing in other asset models like buying gold, buying stock, or even cryptocurrency and commodity trading. So in case you're coming across a video like this for the first time, this is Meet the Property channel, and this is where we discuss everything in real estate. And I'm so much interested in keenly discussing this topic because a lot of investors that have been doing excellently well and have been running a profitable portfolio in other asset classes, they try to assume the same also appear to real estate, which means that people that are successful in cryptocurrency, people that are successful in stock, they jump into real estate with the same perception, with the same mindset, and they feel like it all works the same way. Actually, that's not the case. So this episode, this video is going to help you and guide you, particularly when you are an already successful investor in a different asset category. So after watching this particular educative guide, I will also suggest you go through any of our videos, particularly if this is your first time you are coming across my channel. We have a playlist. We have a playlist on Ekpe, playlist on Ibejuleki, playlist on Chevron, playlist on shortlet, playlist on land banking, land document, CFO, everything you need to know to get started in having a successful real estate portfolio. We have a playlist on that, and you can pick any of the playlist and start watching the different videos and episodes that we have done under this playlist. And once again, if you are a frequent viewer on my channel and you are not subscribed yet, this once again an announcement and an invitation for you to subscribe to our videos so that you don't miss any of these contents as we publish them. We are also very, very active now on our YouTube shorts. So as you subscribe to our videos, you're also going to be getting our YouTube shorts, which are like our 15 to 60 seconds videos, mostly site videos, and also product videos for people that really want to see what we have and the kind of opportunities they can take. Our YouTube short is going to assist you with that. All right, so let's discuss about real estate and other asset classes. Generally, real estate is not only the form of assets investment. There are also other investments that are also considered an asset. Gold is considered an asset. If you invest in gold or you own gold, it also appreciates, and it's also very, very valuable, and it's also much easier to liquidate than real estate. So gold is an asset. Cryptocurrency in the past, let's say 10 years, with Bitcoin, Ethereum, and many others, I absolutely don't know a lot about cryptocurrency, and that's why I definitely will not go online and start talking about it. So, but cryptocurrency is also an asset investment, and you have seen people over the past 10 years, 8 years, 7 years build fortunes and build their wealth around investing in these coins and in these tokens. Stock is also an asset class. We've seen people in the past 20, 30 years build their wealth around stock. One of the most successful investors in private equity or in equity particularly is Warren Buffett, and is worth over $100 billion. So stock is also an asset class, basically. And then commodity trading is also another form of asset investments, and we've also had people invest in these commodities and also make their fortune and their wealth around it too. So we are going to be comparing real estate with these other asset classes. Like I said, a lot of you are already successful and have built a couple of fortunes and have some sizable portfolios in some of these other asset classes, particularly the Gen Zs. Almost every Gen Z right now have a form of crypto or a token or a crypto wallet, and a lot of them now come into real estate with some of the techniques, models, and the perception of this is how it works in the stock market, this is how it works in commodity trading, this is how it works in cryptocurrency, and expect that to also automatically works when they start investing in real estate or when they start owning real estate. So we are going to be looking at the differences, the similarities in this video. So the first category, we are going to be comparing real estate with other asset classes in terms of the entry capital. Entry capital basically means the amount of money that you need for you to start investing in a BRS minimum in any of these asset classes. If we look at real estate is considered a capital intensive investment model or a capital intensive asset class. In Lagos right now, a two-bed apartment might cost you upward of 100 million, 100 million naira, and a three-bed apartment can cost you like upward of like 150, 200 million, depending on the location. And the same also applies in Abuja also. In terms of other asset classes, you might still be able to enter some of these other asset classes with a lower entry capital and a lower entry barrier. Compared to cryptocurrency, where with probably like 100,000, 200,000 naira, you can still invest in some certain coins, or even 1 million naira invest in some certain coins. The same thing with the stock markets. There was sometime last year when almost all the commercial banks in Nigeria were like in our eyes and in our ears running adverts regarding them currently having capitalization and inviting the public to also own some shares with them. So the entry capital in the stock market also can be quite lower compared to the entry capital in real estate. So for a lot of you, you might want to start your investment experience in other asset classes, get to test the ground, get to build investment appetites before you now eventually graduate into real estate, because the entry barrier and the entry level to real estate is quite higher. Although there are also some other form of real estate models that lowers the entry barrier considerably, like if you are doing crowdfunding or you are doing co-ownership. But compared to most other asset classes, the entry capital in real estate is quite higher. So you must get to a certain financial level in terms of how much you earn and how much is coming in for you before you can decide to say that, okay, yes, I can start to invest in real estate. Because another thing is liquidation. That takes me to liquidation. Liquidation in an asset refers to when you can convert that asset from whatever model or whatever mode it is to cash. Because in most cases, when you are investing, you are taking out your cash and converting it into something else. If you are investing in real estate, you are taking your cash and converting it into a land or a building. If you are investing in stock, you are converting your cash into equities. Basically, you are owning equity in a business or in a company. That's stock. Then cryptocurrency, you are converting your cash into digital currencies. Basically, instead of having the cash as a paper, you're converting into a digital currency. And with commodity trading, you are converting your cash into a commodity, which you are planning that, okay, in the next social period of time, this commodity will be valued or be worth this social amount. So in terms of liquidation, is when you can now convert that investment or that asset from whatever mode it is back to cash. So now you bought real estate, you convert your cash to a land or to a building. Now you want to convert that land or that building back to cash. You want to convert that equity in a business back to cash. You want to convert your digital currency that you are just seeing on the phone back to a physical currency. So that's what we mean by liquidation. So in terms of liquidation, almost every other asset classes, you are going to be able to liquidate faster than real estate. If you have your cryptocurrency, there are a lot of trading platforms where you can exchange your cryptocurrencies to dollar, to USD, or to whatever you want to convert it to. If you have a commodity, like you invest in commodity trading, you can basically just sell and then you are back to converting it to cash. And if it's also private equity, you own equity or public equity, you own equity in businesses, you can also convert those to cash way easier than if you are trying to sell a land or you are trying to sell a building. So real estate is actually considered a solid asset. Solid. A solid asset. And that's why previously I mentioned here that there is a certain financial level that you must attain before you start playing the real estate game. Because real estate is solid, it means that it's going to take a longer time for you to be able to convert it to liquid cash. And for whatever reason, if you need liquid cash quite urgently, running to your real estate portfolio or your real estate asset might not be advisable. You might be able to liquidate faster if you run to your stocks, to your cryptocurrencies, or even to your commodities, basically, or to your gold. Let's put it that way too. So real estate is considered a solid asset, and this is not really a bad idea because, to be very frank with you, there is this level of solid assets you must always have, particularly when your net worth starts to skyrocket. If your net worth is valued at maybe let's say $1 billion or $1 million, there's a percentage of your net worth you want to remain solid or you want to keep solid, so that it's going to be very, very difficult for you to like liquidate it intentionally. Intentionally, you put that percentage like 20%, 30% of your net worth solid, so that you know that, oh, this place, even if I need cash urgently or whatever, I'm not going to touch it. Solid. So that's the idea. So real estate is a solid asset and is way more difficult to liquidate compared to your gold, your crypto, or your stocks, basically. Now, in terms of digitalization, now we have some technologies that is also related or that is inbuilt into investing in real estate. We have listing apps or listing websites, which are where investors can go and then see available listings in a city or in a country. We have something like that in Nigeria. We have Nigeria Property Center, Property Pro, and the likes, where you can see available listings and you can filter going to Lagos, even filter going to Etiosa, going to Lekki, going to Ikoyi, and see different available listings. So there is marketplace for real estate. There's digital marketplace for real estate also, where you can go and see what we have, really. But in terms of digitalization, real estate is still quite way behind compared to other asset classes, like cryptocurrency, for example. Cryptocurrency even relies on the internet because everything about the crypto coins, the crypto wallets, the crypto tokens, the crypto valuation, the liquidating or withdrawing your crypto is all attached to the internet. So it's digital currency basically. So everything works via being online, being on the internet, and connected to the web, basically with crypto. The same thing with the stock to an extent also. You want to buy a stock, you want to sell your stock, want to see your stock valuation, want to see best performing stocks, and almost every other thing also is also a lot digitalized, really. These days, your stockbrokers, your fund managers, they are, you likely might not even see them face to face. They're just people you talk to on the phone, exchange emails with, and there's a single platform that connects you with these guys, and they're handling your money. Funds are being exchanged. You can deposit, you can withdraw, all by doing these things digitally. Now, with real estate, to an extent, you can still invest digitally. There are virtual tours right now where you can see the property. There's a Google map where you can go in and see the proximity of that property to whoever around it is. Basically, so and then you can also list that property yourself to either for short let or for rentals, from wherever that you are, basically. But there are still some physical parts to real estate. Physical in terms of if you are listing the property for short let, there still need to be someone there when the occupants want to check in or when the occupants want to check out. If you are listing the place for rentals, there still likely have to be someone for that they can talk to, in terms of when there are complaints, repairs, or maintenance. So real estate to an extent still requires some form of digital physical presence compared to the stocks, compared to um, cryptocurrency and the like. So if you cannot be physically present yourself, that's when you cannot have property managers, you cannot have your agents or whoever that you are putting in charge for them to do the physical touch and that physical presence required for real estate assets compared to stock. You can own a stock for 20 years and then you just don't have to bother. It's just all by having maybe the certificates either digitally or physically. The same thing with crypto and the like. So digitalization of real estate in terms of digital and digitalization, real estate is still a bit way behind compared to the others. So next, security, and this is where real estate wins. Basically, real estate beats every other form of asset class in terms of security. And when you talk about security, you're not talking about there is a fence or there is a burglary or there is um, physical security. We're talking about security in terms of this thing that I'm putting my money into. Um, is there a possibility that at some point in the future it will no longer be in demand? That at some point in the future it will no longer be needed. At some point in the future there will be something else that is going to replace it. So real estate wins every other form of um, asset class in that regard. You can buy a crypto coin today, depending on whatever that is happening, and then probably something happens in the next 20 years or in the next 50 years, that coin might not longer be in existence. As at, let's say 1990, there was nothing like cryptocurrency. As at 1990, that's just roughly like 35 years ago, basically. But even if you go back to the time of Jesus and the time of Moses, there was still real estate, basically. People were buying land, people were farming, people were leasing farms, people were building houses, people needed accommodation. And now that demand, that need is still there because it's a basic need. And in the next 100 years, in the next 200 years, you can still say it confidently and assuredly that real estate will still be needed, even with the age of robotics, with the age of AI. Even AI needs real estate because AIs need data centers. Data centers are not going to be on the cloud. Data centers are going to be on land. So AI even still need real estate too. So in terms of real estate security, real estate wins confidently. A lot of the businesses, the S&P 500 in the US, I think the oldest out of those companies, either Microsoft or Apple. And as at 100 years ago, none of those businesses were like in existence, really. And in the next 100 or in the next 200 years, we can't really say assuredly that all these businesses are still going to be in existence. Even if they are still in existence, we can't say assuredly that these businesses are still going to worth whatever they are still worth right now. But in terms of real estate, it's certain that land will still be needed. That building will still be needed. So we have properties in Ebutemeta, in Yaba, in Sabo that have been passed on for 3 generations. And if you look at the top of those buildings, you are going to see the name of whoever bought that first land initially, Alaji, whatever. Some of those Alaji or Alaja have been dead 30 years, have been dead 35 years, have been dead 40 years, 50 years. Their third generation still have that assets, are still making money from that assets, are still collecting returns from that asset, even though whoever that bought it 60 years ago, 40 years ago, 50 years ago. Go to Ebutemeta, go to Alagomeji, go to Sabo. It's very common. You're going to see buildings and see the names of different people, Alaji, whatever, Alaji. Some of them are even going to write the time that they died on the top of those buildings. So in terms of security, real estate wins every other form of asset class. So, and there was this publication I saw also about a building in Japan, a hotel particularly. That hotel building, have been passed, I think, for like almost 200 years. And around like 20 something generations have been keeping that hotel running and that building running, real estate, basically. So in terms of security, really, if you're looking at something transgenerational, something that can go up to like your grandchildren, even your great grandchildren, then real estate is the way to go. So in terms of security, real estate wins, basically. Then what other familiarities can we look at? Okay, let's say in terms of loss, every investment have their loss model. Every investment, including real estate, and that's why if you don't want to lose, don't invest. It's that simple. Is a common rule in every investment that you don't put what you are not willing to lose there. Every investment, they always say it. If you have read enough investment books and you have listened to enough investment coach or coaches, that are going to tell you this is a basic rule. Basic is the primary rule for every investment. You don't put what you are not willing to lose. So a lot of different Ponzi schemes have crashed and so on, and a lot of people start crying out. They put their school fees there, they put their emergency funds there, they put their retirement funds there, blah blah blah, whatever. That's just them being naive. Is a basic rule of investment that you don't go into an investment with what you are not willing to lose. So every investment class, every investment category have their own loss strategy or loss model. Real estate have its loss model. Gold has its loss model. What's the gold loss model for gold? Thefts. If you buy gold, a gold necklace, a gold chain, a gold bracelet, whatever, thefts, it can be stolen. Someone can come into your building and then pick it up. So that cannot happen for real estate, definitely, because if you have a building or you have a land somewhere, someone cannot just go to the land and uproot it and thief it, and then you come another day, you can't see the land there again. So, but real estate also has its own loss. In terms of cryptocurrency, also, there are also a number of loss strategies around cryptocurrencies in terms of like how it fluctuates. Um, the technologies behind it too is not yet widespread. There are still some countries in the world where you can't trade your bitcoins or trade your coins, and also there are some countries in the world where you can trade it freely or even withdraw it freely also. So that global acceptance is not yet there for cryptocurrency also. That's also part of the loss anyway. For commodity trading, depending on the kind of commodity that you are investing, you can face loss from um, you can face market losses from price fluctuation. You can also face market losses from spurts. Like you invest in, let's say, maybe a fresh, maybe you are trying to buy palm oil and then store it and then sell it later when the price is higher. We are trying to buy ginger, store it and sell it when its price is higher. You are trying to buy beans, store it and sell when the price is higher. So you can also face loss in terms of some of these things are going to spoil. If it's livestock, mortality is there. Some of these things can die. So that's the loss model in that particular category. So if I'm investing in any of these asset classes, yours is to now sit with a risk manager or a fund manager and now discuss, okay, what are the risks attached, what are the ways you can lose money, how can we mitigate it, how can we manage it, how can we reduce it. You can only reduce it, you cannot eradicate it. So if you invest in real estate and you got your hands burnt, you lost some certain money, it's part of the investment experience. Yeah, it may sound harsh, it may sound very, very difficult to accept, but that's it. It's part of the investment experience. There's no way that you're going to invest in stocks, crypto, gold, real estate, all at the same time for a number of 10 years, and you're not going to experience a loss. It's impossible. Despite how extremely successful Warren Buffett has been as a stock or equity investor, he has also had his fair share of losses too. It's absolutely normal. It's all part of the investment experience. So, all these different investment or asset classes all have their own losses, and real estate also has its own loss. I've seen a couple of my colleagues um, doing the advert. They say, "Oh, real estate is the most secured asset class." That's true in terms of security, and you can't lose. You can lose in real estate. You can lose big. You can even lose it all. Yeah, it's very, very possible you can lose it, or you can lose both your capital and return or projected return. You can lose the property, lose the amount you bought it, lose everything. Very, very possible. So loss is also in real estate, loss is in gold, loss is in crypto, loss is in stock. So when you invest in real estate and you are complaining about the loss there, I want to let you know that if you are an avid investor in any other asset class also, you would have experienced loss in that asset class. Since Trump came in, the entire stock market in the US have been on a downward spiral. Over like almost 2 point something $1 trillion have been wiped off from the stock markets, the downward spiral in the stock market, and it has even affected the biggest, most successful companies, the Microsoft, the Nvidia, the Meta, are the ones that their stocks are even coming down actually. So it's a loss. That is stock market loss. So real estate also has its own loss too, really. So these are just like we trying to compare real estate with other asset classes and trying to make the migration very easy for you. If you are coming from the stock market as a stock investor, you are coming from the commodity market as a commodity investor, you are coming from the crypto market as a crypto investor, and you are trying to now migrate into real estate. This video will help you and give you the solid foundation that you need to know about real estate, how real estate works, the liquidation, the security, the entry capital, the digitalization, and also the loss. Now, once again, we are inviting you to subscribe to our videos, and if you have subscribed once again, thanks so much for that. But we are still going to ask more. Kindly follow the instruction on the screen and turn on the notification button so that you don't miss any of our videos. And if you would like to see what we have, our portfolios, our products, just go to our YouTube shorts. Watch our YouTube. By the time you watch like almost 15, 20 of our YouTube shorts, you already have an idea of like the opportunities available. And once again, we have a startup that we are working on at the property guy here, who is one of also the partners, because I have a co-partner. I'm also like the founder, and we have this prop tech we are working on, and we are also looking at more partnership, particularly in the part of like funding and financing. And if you are interested, we can pitch our idea to you. We can show you a pilot version of the app and see what we are also trying to do in the markets and see how we can partner together in that regard. All right, so I still remain your number property on the planet, your property advisor, property consultant, Rabi Mustafa. Thanks once again for watching our videos, and see you next time.